Hello to all traders and welcome back to another market review brought to you by Orbex. So we're looking at US indices today after they've had a little bit of a choppy start to the year. We've had the Dow down just over 1% since the start of the year after it looked quite bullish when January came along, and also the S&P, it's still looking like it's in a bull run, but we'll check those charts shortly. So what's the reason for the choppiness? Well, we've got high inflation still having a bit of a concern in America. Obviously the jobs report and the PMI figures that we saw in February were quite optimistic. However, we've got new NFP numbers coming up for March as we begin the month. So does this mean another downturn for the Dow and the S&P, or are we looking to have a little bit of a pickup? Well, the Dow has seen a double bottom being hit, and it gives it more of an optimistic chance that we will see a bounce in the markets. But let's have a look on the charts just to see what we are, well, the opportunities that we're looking at the moment. So as you can see here, we're having pretty much a double bottom for now, and we're just waiting for the next signal to see if we're going to have a turnaround in fortunes for the Dow and start moving higher, or obviously, break through this, and then we'll see lows that we haven't seen since the back end of October. But as you can see, from the beginning of the year, it looked quite optimistic for the Dow if we look on the beginning of January, but it's been very choppy since then. And as you can see here, another turn to the downside has seen possibly more of an optimistic sell-off than we have seen previously. When we've seen these bounces before, we've seen the price move roughly up, well, past the 34,000 handle. Now we're looking more towards the 32,000 handle than anything else. If we look on the 4-hour chart, though, most interestingly enough, which will be a little bit easy to see in the near term as well. Just remove some of these drawings because does get a little bit out of hand sometimes, even I could admit. So just pull this back. As I said, double bottom being hit at the moment. We're having a little bit of an upturn in the last couple of hours on the Dow, and this could indicate that we could see another push to the lower side of this Ichimoku cloud, which could see prices get into the range of 33,000. But if we bring it even lower to the 1-hour chart, most interestingly enough, as you can see here, it's almost like uh, a very confirmed bearish channel at the moment, very choppy price action to the downside. It's looking like it's not been able to grasp and test the previous highs when it's had a leg lower. As you can see here, we're having a few false spikes in that vicinity, but now for the last few hours, we're in a very bearish channel, and the RSI is showing a little bit of a bullish divergence here, as you can see, but will it be enough to start propelling prices back to where traders want them, roughly about the 34, 35,000 handle? Well, as you can see here, there's a slight uptick, but it could just be a case of another correction to the upside, get to a certain point, possibly to the lower border of the Ichimoku cloud, roughly about 33,000, and then start moving lower again. So it's a bit of a conundrum at the moment, which where the Dow is going to go. Obviously, inflation is dropping quite significantly, but still at a elevated pace than it was before the COVID and obviously the unfortunate Russia-Ukraine conflict began. So we've got yearly high inflation still weighing down, and no end in sight for a terminal rate from the Fed, which is most important as well. So S&P as well, just want to bring it on the daily chart first of all, because the last time we saw the S&P, we were tracking this bullish channel, and it is still pretty much in the vicinity of this channel. If we just break it down a little bit further, we have had some negative days for the Dow. It has and the S&P, sorry, it has dropped off quite significantly, but it doesn't mean that it will keep going. So we've got a thin cloud here, which means that it's easily penetrable. So we could see prices moving a little bit lower, roughly below the 3900 area, which is just above at the moment. But if we can get more of a sense that prices will start moving higher. There's not really any divergences on the RSI at the moment, but if we look on the 4-hour chart, as we usually do, we're just seeing now prices are well and truly still in the bullish channel, and we have just had a bit more of a pierce of the Ichimoku cloud, which gives us the impetus that prices are still on the downside. So don't be surprised if we start falling lower, roughly about 38 to 3700, and this will be prices that we've seen not so long ago at the back end of the year, just a couple of months ago. So, but we've had some really good optimistic moves in the S&P environment at the moment. It's been quite bullish. We've just had a bit of a downturn in stocks, a downturn in indices as well. So, with that being said, we've had a strong dollar in the near term, but it's all about the Fed controlling the movement of indices and stocks and the dollar. So, just keep an eye out for the fundamentals coming out of America this week, and we'll keep you up to date as well on our Telegram channel and YouTube channel. And let me know what you're trading on and what you think. So, let me know on our YouTube channel, and we'll speak again next time. Bye for now.